This was imposed all the way back when Janet Yellen was still the Fed chair, if I believe, right? That's correct?
Correct.
7 years. The idea that this asset cap basically meant your balance sheet can't go above this amount, which basically means you effectively can't grow. If you're a bank, you basically can't grow.
That's right.
Yeah.
This cap effectively restricted Wells Fargo's growth at the level it was at in 2017, which was with assets of about 1.95 trillion. And it hasn't really been able to grow like its rivals since then. And to put that in a little bit of context, JP Morgan has almost grown in terms of asset size another Wells Fargo in the time that it has had this cap. So this news is really a huge deal for the bank's CEO, Charlie Scharf. It's the end of an era of nearly 10 years of it trying to escape these scandals that emerged around 2016 and related to sort of mis-selling and of certain products and opening of accounts. So this really is now the moment that they can really focus on growing in terms of their investment banking and catching up with their Wall Street rivals like JP Morgan and Bank of America and Goldman Sachs.
And maybe there's a catch-up coming in the shares, too, because you take a look over the past 7 years, Wells Fargo's up 68% over that time, which isn't bad, but then you compare that to JP Morgan and Goldman Sachs, both up 200% or so, or in that ballpark. So let's talk about the future. Charlie Scharf has to be feeling pretty good right now, and now that we have this cap lifted, what would you imagine is close to the top of his to-do list?
Well, I think that he had already put a lot of focus on expanding its sort of Wall Street engine, boosting trading, boosting investment banking. So without the cap now, he can really sort of go full throttle into that. And the bank now is a much more appealing place to work for those for traders, for investment bankers, because they know that they can probably take a little bit more risk. They know that they can really grow. So really now I think this is Charlie Scharf being able to play on the offense. I mean, it had really impacted the bank's strategy and the bank's growth over these years in many ways. Charlie Scharf, he shed a number of businesses that they didn't see as core. He also restricted and cut certain headcount growth. So the bank has been really dedicated to ending this restriction.
And it's interesting. I mean, Bloomberg reporters basically did some calculations and found that maybe we're talking about something like $39 billion in profits were effectively left on the table going back to 2018, largely because of that restriction as well as other restrictions that they've now gotten out from under. I guess the question for you, Sally, is kind of what comes next, right? Because like, what is the identity of Wells Fargo? I mean, we tend to look at it primarily as a consumer-facing bank, personal loans, consumer loans, auto financing, things like that. In a few years, if we're still talking about them, are we going to be talking about them more as a trading house, as an investment bank, or are they still going to be that consumer-facing loan business?
I think it's both. I think they still very much want to be consumer-facing, and they have made certain specific pushes in some markets. In New York, they are opening a number of new branches, but in a way, that's also with the aim of being more present on Wall Street. So I think the future for them is to be this much bigger presence among its Wall Street
more
rivals.
branches. Yeah, that's what the city needs.